Let's do this. It's May 8th, 2012. I'm Curtis Hollister, and you're watching The Quarter on Investor Candy TV. National Fuel is one of those companies that's in natural gas, as well as Chesapeake Energy. Today, we're going to be talking about these two companies, what they're doing right, or at least kind of getting by with Dana Blankenhorn, a top contributor on Seeking Alpha and TheStreet.com. Dana, welcome to the show.
Good to be here.
So, Dana, you just wrote an article about these guys. Everybody kind of has the same conversation going about anything that, whiffs of natural gas. National, just basically are trading under the symbol NFG on the New York Stock Exchange. Basically, just come out with some results. They're skimming along. They're basically, the ship is not sinking. They've got about trading at I think it's about 18 times PE, and earnings per share of about $2.50. So not a poorly managed company when natural gas is at a pretty low price.
Right. Now, National serves, they have a natural gas system that sells gas to customers in New York and Pennsylvania. They also drill for gas in New York and Pennsylvania, as well as California. They have a complete system to get the gas and sell the gas. It's a very standard, easy way to play in the field. I consider them sort of a baseline for somebody who's into or interested in Eastern natural gas.
Now, they've been kind of skipping along at around the same price for a long time now. And this is just one of those kind of companies that's kind of held by the market for the price of natural gas. That being said, they have kind of curtailed some of their exploration, and have they not?
Yes, they have to. Right now it costs about, everybody talks about the miracle of fracking. Well, the miracle comes at a cost. You're paying something, drillers are paying something like $3.50 per MCF to extract new gas from some of these plays. However, the cost of gas, the price of gas, is now, after it's gone up a little bit, is about $2.10 per MCF. So you can't make it up on volume,
Yeah.
like the internet. You have to try and make money. So what the natural gas companies are doing is shutting in as much production as they can, lowering the amount of exploration they do, reducing the supply in hopes that it will eventually meet the demand. Now, that was caused by the glut, a lot of production last year and the year before due to fracking. It was also caused by a very warm winter. So they didn't sell as much gas.
Yeah, not as
That's
much
why
demand for the
National is
energy.
right. That's why National is at 18 in terms of the PE. People do anticipate that with colder weather and slightly higher prices, they will have better earnings, which will lower the PE, price over earnings.
Yeah.
The higher the earnings goes, the lower the PE goes. So, an 18 PE for that stock, it's explainable.
Yeah, understood. Switching gears to Chesapeake, I mean, these guys are down basically 50% in the last 52 weeks. They were trading around $35 a share. Now they're around $16.50 a share. They kind of epitomize the normal story of a natural gas company, do they not?
Well, yeah, I mean, Aubrey McClendon is Chesapeake. McClendon pushed the Marcellus shale play very aggressively. He was one of the first to go into it, to successfully drill it using these new techniques to extract gas. And he trumpeted his success quite loudly. And he got a lot of money into the play. And he got a whole lot of credibility. And shareholders gained a lot in the
Mm.
good times. But in the bad times, he suffers more than others. And now that they're finding out that he was running a hedge fund on the side, and that he had all these side deals,
Yeah, nobody likes
it's not
that.
good. No, it's not good. It's not good for him. I'm sure he agrees. It's not good for Chesapeake. It's not good for shareholders.
Yeah.
they get hurt worse than shareholders in National, which is more conservatively managed.
Yeah, no matter how capable a guy is, if he's the CEO of a public company, it's pretty hard to be kind of put him, especially a major public company, it's pretty hard to be kind of diluting yourself across other interests. I mean, you just become an absentee landlord.
Right. I've compared him to some of the swashbucklers of the past. I started my journalism career at the Houston Business Journal
Mm.
during the 1970s oil boom. So I'm well familiar with guys like, Cullen and H.L. Hunt and all these very flashy, swashbuckling, gambling types of businessmen who succeeded enormously. I mean, they built ginormous multi-billion-dollar fortunes for themselves and the people who invested in them back in the 30s and 40s. McClendon tried to bring this kind of attitude back in this decade. In a way, you got to admire him for it.
Yeah, I
But
mean, I don't fault these guys for being ambitious, nor do I fault them for. I mean, he's probably a really great guy. It's just so open for criticism the minute you're a public executive, and
mhm.
you're not kind of fully disclosing all these other things that you're doing. But more importantly, I mean, shareholders are the one that are going to pay the price if the CEO is not around.
Right. Now, Chesapeake has a lot of drillable assets in places that are heavier in oil and natural gas liquids
Hmm.
than the Marcellus Shale. They have plays in Ohio and in Texas, and they could come up trumps because oil is still selling for $94, $96 a barrel,
Yeah.
and that's after coming down considerably over the last week. Um, but how low can oil come before the costs of the new technology make the play uneconomic? The last barrel cost of some of these oil plays is getting up to $80, $90 a barrel.
Yeah, I mean that's the challenge. I know within the tar sands they're looking at price points around $40, $50 a barrel. I mean the days of the Saudis basically having $2 a barrel as their cost. I mean those are over. Um,
Mm-hmm.
so what about within these jurisdictions like California that National is operating in? I mean California is not super friendly when it comes to mining. So this is really a form of mining and extraction. Environmentally, is the jurisdiction of California going to cause a lot of problems?
So far, not as much as you might think, given California's own financial problems and the fact that most of these plays are well outside of town.
Mm-hmm.
In the Marcellus Shale, however, you're talking about exploring for oil and natural gas, especially natural gas, underneath farms and suburbs and cities.
And
That's proving a lot more controversial.
well, especially it's all about the hydrogeological elements, right? The minute that natural gas and water start basically intermixing, you get effectively a kind of a poisonous carbonation that can happen in some cases. Not all cases, but there are examples of that. And I mean, I think that's what everybody is scared about is when you're doing this fracking. I mean, you don't know exactly what's going to happen.
Yeah, and they like to say that they're not fracking anywhere near where the water is, that they are, many thousands of feet below that line, and in different strata. But there have been some, very upsetting examples. And while the industry has been working the regulators as hard as ever they can to make sure they're not held responsible beforehand. For instance, they don't have to tell you what they're using to frack with. They
Yeah.
don't have to tell you what they're pumping down that well when they're doing it or before they're doing it. They can just go ahead and do it. They have gotten past a lot of environmental objections over the last several years because we're desperate for new sources of energy. And these guys promised it and they delivered it. So money talks.
Yeah, of course. Always the case, especially when you have an economy like California that is being harmed, and there are contingencies that are against these things. So these guys are at 45.78 right now a share. Do you see? I mean, where do you see this going? They've been kind of hovering, In the last year, they've gotten up to about $75 a share. Or I mean, are they going to make another surge up to $50+?
My guess is they're going to drift slowly downward until we're really more certain about the longer term price of gas. People are saying, okay, we're shutting in some gas supply, but whenever you drill for oil, you're going to get gas associated with what comes up.
Yeah.
And that means that there is going to be more supply. We don't know what next winter is going to be like. We don't know if perhaps new markets are going to really develop in terms of transportation. So there are a lot of reasons to be cautious, but I think in terms of national, I think cautiously optimistic.
Yeah, and all these guys, like when the price starts going up, like we've said many times, I mean, there's going to be a whole bunch of companies that start to consolidate. There's going to be companies that, start to jump up in value that, have the attention of the market. I mean, they seem like they're obviously probably one of the good choices to keep an eye on within that, but there's lots of them.
Yes, national is a much better choice right now because they both produce and sell natural gas. They
Yeah.
have captive customers.
Yeah, the exploration market is tough.
It's not very good right now.
Anything else you want to say about these guys, Dana?
I'd keep an eye on them. I really would. If they get much below 40, they might be worth a little nibble at some point because, as you say, they've been up to 75 before.
Yeah.
A lot of the stuff's getting shut in. There's going to be a lot less supply. Prices are going to have to eventually go up, and they're going to benefit.
Yeah, absolutely. Perfect. Well, Dana, as always, thanks so much for your time.
Good to be.
If you'd like more information on Dana Blankenhorn, you can visit his blog on Seeking Alpha and look at his articles on thestreet.com. I'm Curtis Hollister. Thanks so much for watching The Quarter.